Alright guys, glad to have you on board again today. I will exceptionally record this one on a Tuesday nighttime, just because I will have some meetings earlier tomorrow in the morning and therefore not going to be able to fulfill the regular schedule. Nevertheless, we're going to do the same old regular stuff in here, reviewing the basic flow sequencing of the headliner assets which we've been following so far, just to name them the S&P 500, and of course you can derive that to whichever assets in this or whatever is your favorite. We're not doing financial advice in here, just showcasing the repeatable strategy that you can take and apply for yourself on all the assets you have. This is open source knowledge, you can just take it, okay? When it comes to commodities, we've followed USD, WTI, and silver so far, and you can as well extrapolate to pretty much all the actual commodity markets, depending on your favorite flavors. And when it comes to the crypto market, we've been studying the big headliners like Bitcoin, Ethereum, but you can as well derive the readings to any other out there. Okay, so let's get it started. S&P 500, remember one thing. Anytime you do this, if you haven't done flow sequencing for quite a while, you might want to zoom out for a second and get the pulse of the higher time frames flow sequencing that always come from low risk management. You need to figure out a low risk strategy first, generally going to the highest time frames you could possibly go by. For the S&P 500, well, you have secular long-term trends. This thing's been trading for decades. So, well, you know one thing, the underlying trend isn't followed by technicals. It's fundamentals who are at play, monetary dilution, growth, whatever it is. In here, you know one thing, don't try to sequence such a thing and try to figure out what the trend is or whatever. Things that have been trading for 50 years, yeah, this is probably something else, okay? So in here, just put it easy on you guys, it's at least monthly. That means the flow sequencing is going to be bare minimum 4 hours, even considering eventually higher than that. Nevertheless, the highest time frame we have is monthly, and in here, as you can say, we have all the evidence of a market top building itself. That means you can't buy, okay? When the market is trading above a resistant context, just trading inside of it means you can't buy anymore. So there's no way you can buy the S&P 500. You've got a breakout target, you've got an exit momentum signal that has been closed. So this is absolute red flag. You must not buy the S&P 500. Now, remember that you can still do 3 things in the market at all times. You can buy, sell, and do nothing. That means in here, one of the 3 is not possible anymore. You can't buy, so you can either do nothing or sell. And I've never told you to sell a market top. There's no way in the Prezi manual or any other educational content that I spread publicly in which I teach you how to sell a market top. I don't do this. The only thing you know is that out of these areas, you all have all the signals to take your fucking profits if you bought this trend, but that's all there is. You're in a take profit area, so you can't buy, okay? So that means one thing, whatever you're going to be doing in the flow sequencing derives from the low risk reading. The low risk reading says no more buying, so you can't buy, all right? The flow sequencing we are in, as we sequenced it so far, is the 4-hour sequence, in which we have a first flow, which has been in here, in here, the flat lining, the moving average pullback, and then the second flow, here is the Bollinger Band pullback, and we go for the third and final flow. We've had the third range boundary in here, which was your taking profit signal to get the head out of here. In this final area, which we had highlighted earlier, we said not to trade this third range boundary as it was preceded by a squeeze, which is the evidence that we might see it to get passed through, and therefore we just don't want to sell this third range boundary for those who were eager to sell. All right? So, as expected, we've broken through it, okay? Absolutely no bearish signals for the third range boundary, and we're now trading in all-time highs again, looking for yet another market top. So what are you left with? Like we said, you can't buy. So whatever it is, I've seen some people saying, yeah, we have a squeezed third range boundary. That means we can buy the 50% retracement of it. No, no, no. Like I said, no fucking buys. You can't buy anything. You don't try to get into this third flow anymore. It's been terminated, your profits are taken, good luck with that, you've made a nice gain. Don't ever think you're going to get the market at the bottom and ride it right into the top. In here, the market has made a new top without you, and you should get familiar with it. It's going to happen. So there's no way for you to buy it and buy back again in this market. But remember that as we've terminated the third flow sequencing, what can be done now is to eventually target higher profits in the distance after we've completed a consolidative sequence, which means you need to figure out a third range boundary followed by bear sequencing in here. That means the moving average will have to be either flat or bearish, and the resistant context will fall down below it, or we'll try to cross it to the downside. Afterwards, the market will generally retrace above the average and so on. Sometimes it will go to the Bollinger Band, doesn't really matter. You don't necessarily try to sell it aggressively. All you know is that normally there's a second bearish flow which encounters the third range boundary, sometimes break it, and then anyway breaks the previous low point and install a second moving average cross down. Okay, by the end of these two signals, you terminate your trade to the downside. Buying is not permitted by the strategy. There's no buying strategy in here that tells you you're going to buy there or there. It's just don't try to buy it. You wait until the first flow installs itself with a moving average that is crossed over by the support context, followed by a third range boundary, and only then, following that sequence, you can buy again the market. I hope you do understand how this area gets tricky if you don't follow the lines, all right? Follow the guidelines. They're clearly written down. There's no uncertainty here, no subjective analysis. You know exactly what you need to see and apply that. So what that means, if we apply that guideline, that means for now on we're trading all-time highs. Don't try to figure out the reversal out of this. Wait until we get a third range boundary. Remember, that's what's written in here. If you don't have the third range boundary, you don't do anything. So if you want to sell something in the S&P 500, that could be a good trade to make. Sell the next third range boundary if one comes up. That means, first of all, we need to retrace back down to 5,100, reverse the context, and pull it back up where you can sell it. This is a trade I'd be willing to take. It's a low-risk trade. It doesn't mean trying to figure out the market top on your own or whatever. It's waiting for degradation and catching on any potential retracement. By doing that third range boundary trade, you can eventually let yourself ride into what could be the first flow. That means you wait until the moving average is crossed by the resistant context. When this happens, take your fucking profits. You would have that moving average, you would be slightly bearish or flat, and you would see the resistant context falling below it. That's the sign for you to get the fuck out of here. Take your fucking profits. Wait for the market to retrace above the average, eventually up to the Bollinger Band, and if you want to sell it again, do it with a large stop loss above the market top, and wait until a second flow plays its game, breaking the previous low points, eventually fucking the third range boundary in between, and anyhow and anyway, pulling the context below the falling moving average. And that will be the sign for you to get the hell out of here for the second take profits. Let the market rebounds and see what it does. If it managed to install the first bullish flow, wait for a third range boundary and buy the moving average. If the market does anything else, meaning like it vegetates flat and it ends up figuring out the bearish Bollinger Band, the top Bollinger Band in here, without making any such a bullish flow or whatever, this will be the sign that you can eventually sell for a third bearish flow. And that means for now on we will reverse the actual top out of the monthly chart by figuring out the first sequence of 3 flows. Okay? So that's how it is. If you want to sell and say, okay, the market is reversing, we've made a market top on the monthly chart and then it's just bearishness all along for now on. It's a possibility, yes, but that means sequencing 3 flows one after another. Until then, we know that anyway we've terminated a flow sequence to the upside. It's still not yet finished. You need to wait for a third range boundary to get there. And only by that time, you can eventually forecast the first flow to happen. If it's the first one, a second one needs to follow before you consider bullishness again. All right? If the 2 consecutive bearish flows are well enough being played, you can eventually start to ride that trend to the upside again for another sequence of 3 flows. If it fails to create itself back up, you would eventually reverse for a third bearish flow to the downside. All right? That's all there is to know for the S&P 500's viable forecast following the goddamn strategy. Everything's been written down. There's no degree of personal assumptions or whatever, okay? It's all what you could do following the guidelines as they've been shared to you. Now, the commodity market. So if we go for the USD WTI in here, remember that the lower strategy might be even higher in terms of time frames in here because we have a sequence in here of overlaps on the quarterly chart time frame. So that might be the sign in here that the flows are bare minimum into the daily chart or even higher. In the daily chart, we've seen that the flow was heavily volatile. It failed to position itself on the moving average and go right down to the Bollinger Band. Remember, that's a possibility. We could do it. So the daily sequencing is okay. The problem is in here, remember that we could also validate it in the weekly chart. We've made that massive bottom in here. We pull ourselves above this level in here. You get to buy the moving average as a retracement, and then eventually we'll get the second flow. The problem in here is that we don't yet get the third range boundary, which means it could very well find some resistance there and eventually pull right back down to the moving average later. So when it comes to WTI, it's a tricky one to navigate. You might want to figure out the uncertainty there is between the daily chart and the weekly probability to get the sequence out of this. And therefore, you need to get ready for the third range boundary to eventually trap you in the market. All right? And if it does get you trapped in, that means you need to risk manage out of this. All right? Nevertheless, to get the second flow, even if it is daily or weekly, you need to break the previous high point first. You know what the next stage is. After you've broken the previous high point, you will get to install the moving average below the rising context. And from now on, you got no such a thing, okay? Though it really is either daily or weekly chart. But even for the daily chart, you have bought the Bollinger Band in here, and we're waiting to get the moving average to start rising, and with the support context breaking above it. That will be the sign, just like it did back then, that your second flow is happening. But before that, you want to break the previous high point. And we're talking about $126. Damn it, we're trading at 80. We're talking about taking 60% on the barrel. That's a significant upswing. So remember that something might eventually happen to cause that thing. And this is none of your concerns, okay? You trade what you see, you don't try to figure out what could cause it, okay? So stay ahead of the headlines. Don't listen to anybody who say, no, 60% on the WTI, that's nonsense. You're not here to judge, you're here to trade what you see. What you see tells you there is a bullish sequence flow, trade it, period. So that's how it goes. That's exactly what people told me about silver. It's not going to work. No, blah, blah, blah. Well, as you can see, it worked exactly as extended. Though we broke the previous high points, and we're now extensively validating the context. For the daily chart, which remember in here, we've seen the legitimate inconsistencies in the sequencing, in which we had all the prerequisites in here to say it's very well extended in the daily chart, and it's the same as WTI. It could actually be worth validating as well in the weekly chart. So we don't know yet which actual sequencing time frame we're on. It could be somewhere around daily and weekly. So get ready for both. What that tells you in here is that for the daily, we have all the signs of maturity that we want. We have broken the previous high point, and we see the context finally breaking above the moving average, okay? Now, on the weekly chart, this is far from being the case. We have that rising moving average, but the context is standing pretty damn far below. But as you can see in here, the context is going to close in just a few days. It's going to close by the end of the month as we close the next quarter, as we open up the next quarter. And as you can see, if we close that high, the context in here is going to rise quite a lot. And that means even on the weekly chart, we might start to see signs of maturity for this flow. Signs of maturity don't mean profit fucking taking prematurely. That means we're going to start looking and paying attention to potential third range boundary. Okay? One thing that's essential, and I've seen some people mixing things together, this thing plays in a fucking sequence, and you need to follow it. The sequence says you buy only after the third range boundary. The third range boundary only happens after you have broken above the moving average. And that's exactly what it is. In here, the flow sequence must start after breaking the previous high point, and the third range boundary only comes after you broke above the rising moving average. And we don't yet have it on the weekly chart. So if we ever have to say, okay, this second flow is terminated on a weekly reference, we're not yet there. For the daily chart, it might start to happen from now on, which means on the daily chart alone is where you could start to worry if we have a third range boundary. To trigger such an event, we would need to retrace down to $25. I don't see that happening anytime soon. We're already oversold, and we're still above the rising minimum 50% context. So I don't see that as a red flag that this thing is going to reverse or whatever. It might flat-ash trade. Remember, we have all the retails trying to buy the thing. So that's all there is. You have all evidence that you should just let it play out. Let it go. We've been very patient. Now is not the time for you to freak out and get the head out of here prematurely just because you think it's too high or too elevated of a price, whatever. Just let yourself ride that thing. Same thing goes to me to platinum, which is playing the same reference time frame. As you can see, the weekly chart in here could be a viable candidate for a sequence to play its game. It's a long-term asset as well in here, secular long-term trends. So we could definitely have yearly basis stuff, whatever in here. And all that matters is same thing. You see the context in here crossing the flattish moving average or slightly rising. We pay the Bollinger Band in here, or the moving average, and we could trigger the flow in here if we manage to break the 1300 level. That means in here as well, staggering input price of higher 35%. So that is potentially something you need to worry about. If commodity prices start to rise for 30%, that means something's probably triggering it, but none of your business. You trade what you see. So long as this pattern isn't invalidated, you need to be bullish on this. It means, as of right now, we have the third range boundary which has been there. If we retrace the previous all-time high, this is where you're going to see normally the context passing above the rising moving average. And that means only by then you would be going for third range boundaries. All right? That's really all there is for you to know. Platinum, silver, WTI, they're all in the same boat, okay? They're now building flow sequencing to the upside. Silver is validated so far. WTI is still really, really long and painful. Platinum here as well, but they're probably both going to validate in here as well in the future. Until then, just take patience as it is. There's no way for you to control when the market is going to trigger. Don't try to figure out what the catalyst could be. Just follow the goddamn guidelines. You know what's next for you to happen. Either you get your stop loss triggered or you get confirmed by breaking the 1300 level, and the reason why it does is none of your business. All right? That's important for you to remember. Now the cryptos to terminate. So Bitcoin in here very, very quickly. We have a monthly reference chart time frame in here, which is following Dow theory. That means there's no specific structure to this. It's just making high highs and higher low points. So until it doesn't, there's no way for you to trade it accordingly to the downside. So it's just, well, don't try to make it overcomplicated. There's no trend structure. It looks like a secular trend. It's been lasting for nearly 10 years. It's non-structured, but it's going higher. It never managed to trade below the moving average, and until it does, there's no way for you to forecast anything as bearish in here. It can only be bullish. So whatever it is that you do, you don't buy above a resistant context, okay? But that doesn't mean you need to sell. Though there's no selling activity on a bullish trend. Don't try to figure out the market top, whatever, okay? Blah, blah, blah. Don't fight that. All that needs for us to know is that the 4-hour chart is likely to reference. Turns out it is, because we already sequenced the flow for quite some time, and we have gone and reached maturity for the second flow, which means we're there. Bam, bam, second flow. We've installed the second flow and we've gone for third range boundary. We're at that stage where we need to buy the Bollinger Band, okay? That's exactly what we do now. If we go to the 4-hour chart reference, you would notice that the Bollinger Band is at 47, 48K. This is where you buy. If we go there, that's a net buying entry for Bitcoin, period. Now, I've also shared some kind of finger guessing stuff, which I said, don't trade it as it is, but I mean, still, there is a high probability, as we trade to the previous all-time high, that this could be a reaccumulation. We have very tight supply. The market needs to replenish that supply, facing the demand on the ETF. And there is a very high likelihood that we build this kind of flattish kind of Wyckoff pattern. And that's exactly what we've done. Played by the book, absolutely perfectly. The spring in here with a nice volatility alert on a rising moving average is a perfect opportunity to buy. If you did not, well, don't blame yourself. It's just a simple trade to me. It was buying low, selling at the top of the range, and taking some partial profits, putting the rest at break even, and patiently waiting. If the market makes new all-time highs, I'm going to profit take. Otherwise, like I said, if the volatility alert that we have there is a signal that we're going to break it all down in a cataclysmic type of event going to the Bollinger Band, boom, I'm going to buy eyes closed. So you know one thing, you don't know where the market is going. It can go higher and fulfill the actual Wyckoff pattern by breaking to the upside in here after the reaccumulation. That means the market will go finding new market top until the pattern terminates itself with the same sequence. You need a third range boundary, and you're going to need to replicate to go down to the lower Bollinger Band where you will buy the same story, okay? It will happen at some point in time and you will be buying it. Does it happen now or some further down the line after we make new all-time highs? That's a possibility, and it's none of your business to try figuring out which one is the true one. If you traded the actual Wyckoff pattern as it is, you know that buying the spring was the actual timing to do such a thing, all right? When it goes to Ethereum, well, congratulations, folks. That's exactly the same thing, okay? If we go long-term, we have a long-term secular trend, potentially monthly, as we had somewhat of an overlap between the two levels. So same story in here. We go 4-hour chart. We sequence the flow. Good luck with that, but that's exactly what we've done. So first and second flow, similar to Bitcoin, basically. We had the third range boundary right there, and therefore we entered the consolidation. Buying in here was the equivalent of Bitcoin spring in its actual Wyckoff pattern, so I bought both in here, took the profit on both exactly there, and the rest is at break even, waiting to either be stopped out or bought in at all-time highs. In that sense, the 4-hour sequence for Ethereum is exactly the same as it is for Bitcoin. If we reject the top of this range, we're going to go to the Bollinger Band. That doesn't mean we're going to go straight line there. We could degrade very slowly, go back to 28 in the forthcoming weeks or months, and eventually, sooner or later, when we hit the Bollinger Band, go right up there again to buy, okay? Until then, we can follow Bitcoin Wyckoff, new gold time highs, have some special catalyst for Ethereum, who gives a fuck? All that matters is if we make all-time high, start the sequence all over again, wait for a third range boundary, blah, 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 you know the deal. If we go to the downside, bunkers, whatever, for whichever catalyst the reason is, buy the moving average eyes closed termination, okay? Now what happens for the rest of the market has been number one concern so far for many people. What the heck do we do with altcoins and so on? I've seen many people confluing all the elements that are just aforementioned, like for example, talking to me about Solana's lower Bollinger Band. Like, do I buy Solana at $98 or whatever? The answer is fuck no. Why the hell would you do this? Yeah, there is something that looks like a big, massive flow on Solana, but there's no such a thing as a sequence in here. It isn't because you would say, yeah, but look, Phil, in here, we've gone higher, we've bought the moving average, and there is a second big flow. No, it's not. I mean, remember that you always start with a low-risk assessment. Do you see a trend there? Do you see a trend there? There's no such thing. You don't even see the bullish context as it is so narrow. That means this asset in the span of its lifetime here has been trading somewhat at a cent level up to $200. That means the volatility is insane and it looks pretty much more like a range to any other stuff out there. So you never buy the top of a range. So in here, that's pretty damn simple. For Solana, you've got one very simple choice. You can't buy. So you either do nothing or you sell. So it's very, very simple. It's just like the S&P 500. In this lesson, I hope it was learned by everyone. You don't just try to copy paste the flow sequence on whichever time frame suits you the most because the structure looks similar to it. It isn't like that. The first thing you do at all times if you want to flow sequence an asset is going to the low risk time frame first. There's not enough history in here for the weekly chart. So best you can guess is a weekly chart. And the weekly chart, as you can see, doesn't show any sign of trend. There was something in here which was fully bunker going to infinity. It was all along, there was no preparation range. It broke to infinity. It gone right back down, not holding the moving average. It's just a fucking range, period. This thing hasn't trend behind that. To get a trend, you need to stay above a rising moving average or flat moving average. You don't dive below it, and that would be eventually the sign of an alternate trend sequence. In here, there's nothing. People see trends where they're not, and I think it's very dangerous. That's a range. We've hit the top of that range. You need to be neutral or bearish. There's no way you can be bullish on Solana. I know so many people just boast for it for absolutely outrageously stupid reasons. There is no reasoning in flow sequence but to follow the goddamn pattern. The pattern says you need to be in a bullish low range area. Though in here you've reached a low risk bearish area. The only thing you do is either nothing if you expect this area to be broken, or you sell. But no buying, flow sequencing, or whatever. Okay? So I'd like to state it very clearly. There's no buying signal for Solana, and if you try to copy paste whatever happens in Ethereum and Bitcoin because you think anyway Solana is going to follow the big daddies, it's not. It's breaking the rules, plain simple. There's no other way around that, and you know it. You've broken the rules because there is no monthly trend on this asset. There's nothing but a range, and that means you're anticipating the range will break, and that is not part of the strategy, folks. Okay? I hope this is clear enough for everyone to understand. If you want to sequence flows on atoms or whatever other assets which are trading on fucking supports, there you can. But that's all there is. And I see people mixing it all together. The reason saying, I don't know, Phil is biased to want to buy Atom and want to sell Solana when the market is doing exactly the opposite so far. Well, truth is, you're telling me to buy a top of a range and sell a bottom of a range. And I tell you, fuck it, I do exactly the opposite. Future will say who was right or was wrong. All I'm saying is, if you bend the rules to your needs, to say, I want to buy this asset and I want to sell this one, and fuck the rules, you're gonna have to suffer the consequences. Because I've done it before, I've done it multiple times before, learning it the hard way, that following goddamn rules is the way to live and survive in the markets. So I don't think and overthink whatever Solana or Atom or particular types of assets. You don't buy in the top of a range, you don't sell at the bottom of one. It's just that simple. All right? So that's it. That means, well, for Atom, you've got two choices. You can either buy or do nothing, but you can't sell. So make it easy on you guys. Don't try to mix things together. Just see what happens on the lowest time frame first. And only by that moment, you can eventually go into the lower time frame chart and try to flow sequencing. But the whole thing of, yeah, the big guys have done this, so all the other crypto markets is going to move along with that. It's not true. It's definitely not true. There are definitely different assets, and you can't bend the rules to say there is one crypto market with a C and every asset trade 4-hour sequencing. It's not the case. Not like that. Only assets that have monthly trends can have these flow sequencing. The others, they might mimic it to try to lure you in. The reality is that you don't. You can't. So good luck with that. That's all I'm saying. I'm going to leave you guys with that. I'm not spitting on some specific assets for whatever reason. All I'm saying is some assets don't have a trend and they pretend like they do. I very well disagree with that. And those who are bending the rules to trade whatever assets they prefer for whatever reason that are not part of the strategies, I'm not putting my stamp into this. You do whatever it is that you want. I'm not here to give you any financial advice. I'm just saying you can't apply the strategy in those contexts. If you do, that's up to your own risk taking. I'm going to leave you guys with that. See you later. Bye-bye.